Seplat Petroleum Development Company, a leading player in the exploration and production market in Nigeria, visited the Nigerian Stock Exchange to perform its financials, also termed the facts behind the figures. In his opening remarks, the CEO of the Nigerian Stock Exchange, Mr. Oscar Onyema, commended Seplat for visiting the NSC to perform its financials and interact with the market. He also lauded the company for ensuring year-on-year increase in its gas production and reserves.
We are pleased that Seplat has chosen to use this platform to inform the market of its financial performance, strategy, and operational developments. As the market is driven by timely, relevant, and accurate information, your interaction with the market through this forum is very welcome. We encourage you to continue in this fashion. It goes without saying that Seplat has risen to become one of the leading indigenous oil and gas operators in Nigeria. We commend the management for ensuring year-on-year increase in its gas production and reserves, and for your resilience in maintaining full operations in spite of the harsh business conditions currently faced by the sector. Notwithstanding the current economic and operational headwinds in the oil and gas sector, we believe that Seplat has continued to work to ensure adequate returns for its shareholders.
In his presentation, the CEO of Seplat, Mr. Austin Avuru, said the core asset of the company is its working interest reserves in oil and gas.
Let me explain that in our business, our core assets are working interest reserves. If you're a farmer, it's like saying your farm, what you have in your farm is how many tubers of yam you have. For us, it's working interest reserves, oil and gas. Out of the working interest reserves, you then look at our production. If you divide our working interest reserves by our production, you get a reserve production ratio, which is essentially the life of the asset. So our working interest 2P, working interest reserves today stand at 480 million barrels of oil equivalent. If you add 2P and 2C we're referring to what we call contingent resources. Resources that we think are there, you have not drilled the wells or come up with a firm work program to put them in production. So you keep them aside. They are there, but they don't count into what we put money on today. So we normally separate contingent resources from 2P reserves. We don't classify contingent resources as reserves. The key thing to look at are reserves. But you see that we put in efforts, put in capex, a lot of spend, and a lot of expertise to then convert contingent resources into 2P reserves and producing reserves. So if you add our contingent resources to our 2P reserves, we're actually at 578 million barrels of oil equivalent. So really, by the end of this year, we are capable as a company of processing 525 million scf of gas. We think we will be delivering about 400 million scf of gas into the domestic market by the end of this year. And again, our production, overall working interest production, has also seen a steady increase from 2010 to date.
He also gave an analysis on its oil production and unprecedented growth in gas reserves.
We started with just 71 million barrels of oil. We have since produced 34 million barrels of oil. So if there was no growth, you would have been seeing only 37 million barrels of oil remaining. We have added another 72 million barrels of oil by acquisition and converted contingent resources, 100 million barrels of contingent resources, to 2P. So when you work the math, when you subtract what we have produced and add what we have brought in by acquisition and by conversion of 2C to 2P, you now have 209 million barrels of oil, 2P working interest. That's what we have today. Now, we normally don't like to look over our shoulders and compare ourselves with anybody. But I can tell you that going from under 70 million scf of production in 2010 to averaging 300 and heading to 400 million scf of gas production per day by the end of this year is unprecedented in this country.
The Chief Financial Officer of Seplat, Mr. Roger Brown, gave the stockbroking community an insight into its financials for full year 2015 and also its forecast for 2016.
key thing here is that we've got profit in 2015, and that's not without its challenges. I think the oil sector globally has been reporting a lot of losses, and quite significant losses in the sector. So we're not alone. We're not alone in this difficult times, but we've re-geared our business to be able to deal with this. CapEx is part of that, and I'll wait to the slide on CapEx. Cash flow before working capital, so $190 million of cash flow, so cash generative as a business. Net debt levels of just over $500 million, up from the prior year because we refinanced. And then cash at the bank, we grew our cash at the bank from 14 to 15 of $326 million of cash. Full year 14, where we had higher oil prices, with a $320 million overall CapEx spend. That's just our share. The government, obviously, that's 45%. The government share was obviously 55% of that. So, you know, almost $700 million of CapEx is an enormous year. We ran 23 rigs in 2014. We ran 23 wells, 8 rigs. So we were very active, and the drilling was 71% of the overall CapEx. Coming into a lower oil price environment, we readjust ourselves. We had a CapEx spend in 2015 of $152 million, and drilling made up 42% of that. The rest was actually into the gas projects and other infrastructure projects. And then we go into 2016, and this is our forecast for 2016, and we're guiding around $130 million of CapEx, and the drilling part of that is about 15% of the overall CapEx spend. So that's how we adjust our business to what's profitable in the environments. To the extent you get an oil price recovery, we can then reinstate wells and increase CapEx accordingly.
In concluding the facts behind the figures presentation, Mr. Austin Navuru once again reassured the capital market that the company was focused on sustainable growth in reserves and production to be the major domestic gas supplier in the Nigerian economy.
We're building a company for the future. Sustainable growth in reserves, sustainable growth in production, and positioning ourselves, particularly in the western hemisphere of the Niger Delta, to be the major, significant domestic gas supplier into this economy.
The steady growth of the working interest reserves of Seplat in its oil and gas production capacity amidst the headwinds is an attestation to the possibilities of indigenous participation in the petroleum sector.